Well, good afternoon then, folks, as we head into US trade on Tuesday, the 25th of July. And it is a pretty similar picture to where we are at this morning, although yields continue their move higher. And the dollar has had a bit of strength coming in the last hour or two. But we'll jump across to that and we'll have a look once we get around to some charts. But the news flow pretty much the same as it was earlier on today. You can see shares rise after Chinese stimulus, which we obviously alluded to this morning. Europe outlook grows darker as well. We'll have a look at the data once we get around to it in the calendar now in a minute. Apart from that, Dow futures lackluster after a scorching rally, which obviously we spoke about this morning, with the Dow Jones rallying higher, the S&P sideways and the Nasdaq lower. So has just chopped sideways as investors await quarterly earnings from mega cap technology companies. So we have a bunch of earnings to come out this week as suggested, and we will update as and when they come out over the course of the week. But apart from that, we are pretty similar in terms of where we are at this morning. Only new development is the European negative European data that we saw this morning. You can see stock indexes are still higher across the board, apart from the Spanish stock index. But apart from that, pretty green anywhere that you look. Commodities higher across the board. You can see yields higher across the board. Obviously yields liking those Chinese developments overnight. US dollar has had a bit of a bounce back. It was mostly red this morning and now it's a bit mixed, but again we'll have a look at that once we jump over to some charts. Euro weak across the board off the back of that weak European data. Goes with weak European data from yesterday again into today. Just a bit of negativity surrounding the euro at the moment. Australian dollar still the strongest currency on the day, obviously due to the back of the Chinese stimulus measures that we had alluded to this morning, and we really sit in the same place in terms of FX land, apart from that euro, which has weakened considerably over the course of today's session. Well, I say considerably across the board, but not exactly massive moves, due to the fact that this IFO business climate figures consensus 88, actual 87.3 at an 8-month low. So couple that with the weak or extremely weak manufacturing PMI yesterday, goes with the business climate for both of those forward-looking figures. So people who are undertaking these surveys obviously not looking favorably at the upcoming economic conditions within the Eurozone. So that's something we need to keep an eye on going forward, and any further negative European data that we get should feed in with that. But it'll be interesting to see what the ECB have to say on Thursday about that. A slowing economy will not be something they will want to hike rates aggressively into. So slowing economy then does get inflation under control, and if the economy does slow and the data starts to line up with that, shows less of a need to hike interest rates, and that will be a further negative for the price of the euro. But that's sort of where we're at in terms of the calendar today. If we can have a look at the US dollar, and we can see this euro dollar chart through the lows again, continuing its downtrend. Apart from that, dollar's largely sideways, but a slight bit of upside, as I alluded to, over the last couple of hours across the Aussie, across the Kiwi, across sterling. Dollar yen not doing too much, maybe somewhat surprisingly with the move higher in yields. Dollar Swiss not really doing too much. Dollar CAD is at a slight bit of a pop higher, but really the movement has come from euro dollar, down kind of 40 pips over the course of this morning, as it obviously was slightly higher as we headed into European trading today. In terms of equity indexes, where we are at, grinding higher on the S&P, chopping sideways on the Dow, grinding higher on the Nasdaq, Russell relatively sideways. The DAX still chopped in this still chopping in this range that we were looking at this morning. A bit of a pop higher, and that probably looks inevitable from a charting perspective. From a fundamental perspective, maybe not the easiest of things to read into. Apart from that though, where we're at in terms of yields, you can see yields continue to push higher. The 10-year yield through the highs, 2-year yield having a bit of a pop higher, and that's likely to be somewhat negative for stocks. So something to keep an eye on, as the move has not been replicated in stocks yet so far. Maybe more of a move considered for kind of global growth with Chinese stimulus measures overnight. We do have the Fed tomorrow, so you can't imagine that sustains too much upside and then too much bond downside into that release tomorrow. But slightly choppy trading conditions across the board. Gold has had another bit of an attempt lower off the back of those higher yields. So, gold shorts that we were looking at this morning seem to have played out over the course of the European session. Slightly sideways on oil, sideways on the S&P. A little bit difficult to read into markets apart from apart from gold and the euro this morning. But on the calendar over the course of the rest of the day, some medium impact US figures, not really likely to impact too much. But into tomorrow, where we've got the Fed, that is the main focus of attention tomorrow. Do have some Australian CPI overnight, and then obviously the ECB as we get into tomorrow. But the Fed and the ECB we will have a look at as and when we come to it over the course of the rest of the week. But yields continue higher. We'll have to see what that means for stocks as we head into US trade. Yields higher, gold lower, euro dollar lower is what is happening in markets at the moment. And you'd have to imagine if those moves continue, yields continue to push higher, continues to lend a bit of support to the dollar with that negativity surrounding the euro this week. Plus yields higher is a reason for gold lower, plus US dollar strength. So gold lower, euro dollar lower seems the way to play it at the moment.